Now, what I want to do in this video is talk about the 5 major setups that I use to execute data flow approaches in my trading. And we'll go through each one, but I want to kind of set this up as to what really are the characteristics of data flow that set it apart from everything else. So let's go to take a look at some charts. I would say that there are 5 major and distinct advantages that separate data flow trading from almost anything else. And what you'll find is you find some other approaches that might have some of these advantages while others have none. and that's a whole other discussion in itself as a coach, when I'm coaching people. But let me go through and talk about these 5 advantages. So the first advantage is directionality. And actually, let me just come up in here and let's just add some text here. So direction, okay? In a system, you want a system to give you enough information to be able to identify directionality, right? You want to know at any given point in time, are you expecting to go up, down, neutral, or do absolutely nothing? Right? Neutral is, you're just kind of bouncing around a bit, right? From this point in time, as an example, where do you think we're going? Like, are we going back up because we had this move here, right? This is a 5-minute chart on gold. So we had this nice move here. Are we going down because, we've started to kind of trend down like this? What does your system say? Now, directionality is one of those things that's pretty common across a lot of different systems and a lot of different approaches. And it's the same with data flow. There is an approach for directionality. Now, when you're looking at directionality, one of the differences, and this is going to be the same for a lot of these things, is that we derive directionality from the statistics, the data statistics that we have that tell us what are we most likely to do. Are we most likely to go up or are we most likely to go down? So that's one of the big differences versus using tools like indicators or support resistance or trend lines. So the direction that you're going to go is one important factor that your system needs to tell you or produce for you. What's the other one? The other one is entry level. You need to have something that's telling you where to enter. Do you enter, let's say that you're looking to go down. Well, where do you enter at? Do you enter, something on the close of this right here? Do you enter something on the close of maybe this right here? What if you're looking to go up? What if your system tells you to go up? Do you have bigger levels that you're looking at? Maybe stuff, all the way down here and you're going to wait until, you hit this all the way down here and then maybe you'll go up, right? Maybe you're looking for something that does this and then back up like that, right? So whatever system you have, whatever approach you're trading, you need direction and you need an entry level. This is where things start to get a little bit different when we're talking about data flow, because data flow goes beyond simply having directionality and levels to help us with our trade decisions. It also includes this feature that most people overlook: time. Time. How many times have you executed a trade that is exactly the right direction and exactly the right entry level, but you were early? You were just a little early, or you were just a little bit late, right? Whatever it was, early or late, you just didn't quite have the right time. Maybe in this case, right, this level, you have a level right here that's actually going to hold to go back up. And you executed, something like this from right here. So you're thinking, I'm just going to go up right here. And maybe what happens is it goes down, and then comes back up and then goes. And you actually had the right level, but you had the wrong timing. Timing is one of the most unique aspects of data flow. And it gives us this extra advantage of being able to separate out the ways that we're trading in the different setups, to look for different things and to look for different entry levels at different times. And also, it tells us when to not trade. And I've got a good example of that where I'm going to pull it all together. So time is an important factor around this aspect. All right. Now, here's where some systems, you've got this in some systems, but a lot of systems really don't have this, and you're just kind of shooting from the hip, which is target levels. Okay, target levels. I know a lot of traders who are scalping or, having some other approach that they trade, that they'll do something like they'll take 1 or 2 R off and then they'll trail. And because they don't know where price is going to go. If you're looking long here, you don't know whether price is going to go, maybe back up to here. Maybe it'll come all the way back up to here. Maybe there's a level all the way up here. And you might have these longer, higher time frame levels you're looking at. So maybe you're looking at this right here. But all you have is levels. You don't really have anything to distinguish the levels or give you high confidence that those are the levels where price wants to go. You're looking at these more from the perspective of this, not that this is a magnet, but that this is actually something that will reject price if price gets to it. So I'm hoping price gets to it. What we're talking about with levels, or we're talking about levels that are magnets, where price actually wants to go. That's a very different concept of levels, right? Think about this for just a minute. Are your levels places where you think price can't go further, or are your levels where price is most likely and has the highest probability of actually going to? Very different concept of levels here in data flow. And then the final thing is that I'm going to add here is the executability. Okay, big word. What it means is how easy or hard is it to execute a system like this.